All right, so thank you so much again for joining. We are going to cover now the small overview on assets under construction. And as you can imagine, this is pretty much related to fixed assets and what we saw this morning. So the idea is to review the end-to-end process, because the asset under construction one is an end-to-end process that is integrated with many other modules. So it's good that you have an idea of how this works. And yeah, then of course we can discuss any question that you may have. So as an introduction, I think we can skip part of it because it's quite related to fixed assets. So just remember that Umoja asset accounting deals with the accounting of fixed assets, which is a subset of non-current assets. Okay, only assets that meet UNIPSA's capitalization criteria will have a fixed asset master record in Umoja, nothing new. Then regarding constructions, okay, that slide is same as for fixed asset. So fixed asset master record, as we were discussing this morning, it's the asset master. It's a master data that is created for each individual asset that meets the capitalization criteria, and it contains information about the fixed asset, including funding source, capitalization date, useful life, etc. So we discussed this morning different ways of acquiring assets, and we didn't discuss enough about self-construction. So self-construction is another way of acquiring an asset, and it can be internally developed. Okay, it can be even an intangible asset if it's a software. It is self-constructed, and yeah, those assets, while we are building them, we consider them assets under construction that are fixed assets that have some particularities, like, for example, they do not depreciate until they are completed. So most real estate assets are acquired via assets under construction because they are normally constructed, right? And it takes more than 1 year to build them. So assets under construction is a setup for different asset classes. You remember what we said this morning about asset classes, that they are important because they determine eventually the GL accounts that will be posted. So we have building, we have infrastructure, and we have leasehold improvements and intangibles. So these are the four asset classes that we normally build with assets under construction. And yeah, the cost of the asset under construction includes material, labor, operating costs, and costs that are collected using cost collectors. So what are the main cost collectors that we are going to use for assets under construction? WBS, work breakdown structure. This is project systems. Okay, so there is another module in SAP that is called project system. Yes, and it's used to create the work breakdown structure of the project. And then internal order. But as I was saying this morning, this is a very important point. For any asset under construction module, for any new one, project must be used. So there's a decision for peacekeeping, and it's that we have to use work breakdown structures and project structure when it's an asset under construction. What we are, let's say, building. Let's say what we are building. So if you have any project, any asset under construction that is already started, and you are tracking and collecting costs with internal order, it's okay. But if you are going to start from zero a new one, then please use work breakdown structure. Okay, then some scenarios where service orders may be used, but okay, this is an overview, so we can skip that point. About IPSAS capitalization criteria of AUCs, the first slide, you will recognize it's the same as for fixed assets. So still, even if it's an asset under construction, it needs to be controlled by UN. It must bring economic benefit or service or has service potential. Asset useful life has to be more than 1 year, and the asset has to meet the established cost threshold, capitalization threshold. What does this mean when we talk about capitalization threshold? What does this mean when it comes to assets under construction? So in an asset under construction, the capitalization threshold has to be aligned with the asset that is going to be created. For example, if our AUC is an AUC in progress to create a building, the capitalization threshold will be $100,000, meaning that we will only create the final asset if the total cost is above $100,000. What if we are building a different type of asset, like intangible or another type of asset, or if we are building a machine or something like that? The capitalization threshold will still be there, and it should be the capitalization threshold of the asset that you are creating. Right? The most common case, of course, is 100,000, because in general, most of the AUCs are real estate buildings or infrastructure. Okay, so no matter at what phase we are of the project, the capitalization threshold will be the capitalization threshold of the building that we are constructing. All right, is it clear this slide about the capitalization threshold of an asset under construction? What do we mean when we say it is aligned to the asset to be created? Can you please click on the green check if it's clear? All right, and if you have any questions, just let me know. Okay, any question about it? You want me to repeat it? So the idea is that, as we said this morning, and if I can open the slide from this morning, you will understand better. 1 second. As we said this morning, we have here a slide. 1 second. In this case, there is no associated cost. No, there is no. Okay, yeah. Let me reply to this one, Hassan. So I was saying this morning, we have the following capitalization criteria, the following capitalization thresholds. So for buildings, the capitalization threshold is 100,000. So if we are, our construction project is to create a new building, the capitalization threshold is 100,000. So the capitalization threshold is the threshold of the item that we are building. If we would be building a vehicle, I know this is not normal, but if you were building or constructing or something a new vehicle, the capitalization threshold will be the one of the vehicle. All right. So in general, the capitalization threshold will be the capitalization threshold of the asset that we are building. Someone is asking if there is no associated cost on this case. So what type of, basically I can reply to you with the following slide. What type of costs are supposed to be capitalized? So the cost for a self-constructing asset, the costs that can be capitalized are any costs directly attributable to bring the asset to the location and condition necessary for it to be capable of operating in the manner intended by the management. In other words, any cost that is attributable and is necessary. So if we are using bricks, or if we are using any construction material from our stock to build the asset, these items that are in inventory will have already the 8% of associated cost in the inventory. But then when we add them to the asset, we are not adding any additional associated costs. It's basically the actual that we are going to capitalize. And it has to be, the cost has to be and this is quite important, the cost has to be attributable, so it has to be can be tracked and identified to the asset that we are adding value, and it has to be necessary. Why necessary? So for example, if you have some cost, but then after you review the asset, you realize that it has some flaws, something that needs to be fixed. So the cost of the rework cannot be, even if it's attributable to the project, cannot be capitalized, right? Because it's not adding value to the project. It's just fixing stuff that were not properly performed. Okay, sorry. So is it clear? What type of costs have to be attributable, directly attributable, and necessary? So how do we track the cost for the asset? So we will use a cost collector. Any question about it? Okay, so we continue. So what is actually the end-to-end process for assets under construction? It will be the following. First, let me tell you who are the roles involved. We have 3 roles mainly. Finance are two of them are sitting in. Well, one of them is sitting in finance. So we have engineering, which is normally having the role PP01 and PP02. This is one role. They are mainly responsible for setting up the project and then following up. We have finance that has one of their main responsibilities, your main responsibilities as FA16 is to settle the costs to the AUC and to the final asset. So it's doing the monthly settlement. Settlement means that it's actually bringing, let's say, expenses, capitalizing expenses that were already incurred. So it's actually the process of the settlement. And then we have PMU PCIU that they have the role FA15, whose main role is manually creating the final asset. All right. So what is the process itself? Let me go to next slide. Okay. So this will be and this is a very good slide and a good summary of the different phases in the assets under construction. So the process will start with the setting up of cost collector and funding. The cost collector is basically the project that we'll need to create for the system to be able to capture costs. And the funding is adding, allotting budget to this particular project. Second phase is collecting costs. And by collecting costs, it's more operational phase. So whatever has to be expended for the project, if we are paying consultants, if we are paying to individual contractors, or if we are hiring a construction company or vendor, if we are paying staff members that are hired for the project, if we are issuing or using materials from stock for the construction, all this happens in the collection cost phase. Then we have a process that is called settlement to the AUC that basically means bringing the cost, capitalizing the cost of the crediting expense account and debiting an account which is 271. So if we are keep capitalizing expenses, removing the value from expense account and bringing it to an asset under construction account. This process, these two processes happened during the life of the project. Actually, the settlement should happen more or less monthly. And once the project is completed, then we will have the settlement to the final asset. Something important to notice is that here there are two asset master records involved. The one that we are settling monthly is an AUC. It is one asset. But there is a settlement to what is called the final asset. This asset here is different from here. This is the asset under construction, but when it's completed, the system, we will create a new final asset that is going to be the one receiving the capitalization value and the full value of the asset. So assets under construction goes actually through four main phases. So I should say here four. Sorry. A cost collector is set up as funding, and funding is then the monthly activities, because we have these two, and then we have the final settlement. So in the slide it says 3 because this is like a monthly activities. So this happens, setup of the cost collector happens only at the beginning, and the final settlement happens at the end of the project, while in between we have a cycle of collecting costs and settling these costs to the asset under construction. Now, did you follow me? Is it clear these four phases that asset under construction have? We start with setting up. Please click on the green check if it's fine. We start setting up the cost collector and receiving the funding. Then we have a monthly activities collecting the costs and settling to the asset under construction. And then once it's finished, we've settled to the final asset. Is it clear? You want me to repeat? Is it fine? I'm not getting enough people saying yes. So if this part is clear, please go to your go with the mouse to the top bar, open your participants panel, and let me know if this is okay for you or not. Those are the phases. This is a very high level review, but now we are going to review each box in detail. Okay? So if you have any question, please. So there is a question from someone that says, I think actually it's Roberto, when can an AUC be reclassified as final asset? So we are settling to the AUC monthly, and only when the engineer will say in the project, this project is technically completed, so this AUC is technically completed, only that moment we will create a final asset and we will settle to the final asset. So the trigger is an manual action of the engineer that has the role PP01. Right? So let's review now in details each of these phases. In details with a bit more of detail, but we will not show transactions and this kind of things. So if you take a look to this arrow that goes from left to right, now I'm going to just show the arrow from top to the bottom. Okay. So now, if we look into setup of cost collector and funding, the process starts with the creation of the cost collector. This is basically means that the PP01 user will have to create the project and the work breakdown structure. And after this is done, there is the need for FM to allocate budget. How do you actually allocate budget to an asset under construction project? So the system, after the creation of the cost collector, the system will automatically create something called funded program. It is a funded program. So the funded program identifies the project in FM. So the FM budget office user will have to allocate budget to the funded program using the normal T code and budgeting workbench. So using FMBB will be possible to allocate budget. Next phase. Any question, by the way, any question about the creation of the cost collector or the allocation of the budget? Is it fine, this first phase of the AUC? Please click on the green check or ask any question as needed. Please click on the green check. Any question? All right. So I go to the next one. Collection of cost. You can call this collection of costs, or you can call it incurring expenses, or you can call it using the budget that has been allocated. One second, sorry, one second. Okay, so as a part of the collection of costs, we have different transactions. We have procurement of goods and services, and this is an important point. For AUC projects, whenever there is the need to raise a shopping cart, it's important to keep in mind if this is for services or for goods. If the procurement is procurement of services, if we are procuring services, then the shopping cart needs to be pointing to the AUC, to the WBS element, to the project, or to the element of the project that we are going to, let's say, use to construct. So services will be charged to the project and then immediately to the budget that has been allocated. So if we have an example of a new camp that needs to be constructed, if UN is hiring a construction company, the shopping cart for that service can be, we can enter in the account assignment of the shopping cart the work breakdown structure element that is required. Understood? Is this clear? Please click on the green check. So because this slide has a lot of information, I need to tell you byte by byte. The services that have to be charged to the project, is this clear? Okay, if you have any question, please go ahead. Now, what happens with goods? What happens with goods? What we said yesterday, or I don't know if it was yesterday or on Monday. What we said on Monday is that in most of the cases for peacekeeping, shopping cart has to be raised for direct material, which means for inventory. So if we are procuring goods for inventory, we will not be charging to the project until the materials are issued out from stock. All right, so there is another way of collecting costs. If we are hiring or contracting services, then we use shopping carts and we charge to the project. If it's materials will go to inventory first, and then eventually we will issue materials out and we will issue them to the project. And then we have also payroll. Did you understand the difference between this procurement of goods and services? So for services, we charge to the project. For goods, when we acquire them, they go to the cost center first. They go to the inventory of that storage location that is linked to the fund center, and then we issue them out to the project with using a special movement time. Okay. And then we have also payroll, and even more than payroll, apart from payroll, we may have some other scenarios where we have to use journal voucher to track some other expenses that didn't fall under these three categories. For example, if you are using military contingent to build, or in a AUC project, you can use journal voucher to track that and link it to the project. All right. Do you have any question about this section for collecting costs? Is it clear? What are we actually doing? We are basically incurring expenses that are linked to the project. So later, when we do the settlement, we can credit the expense account and debit the AUC account. Any question? All right. So this part, so far, finance didn't take any action. No, maybe finance FA16 is in the support. I mean, has been supporting the creation of the project because there are some important fields there that need to be analyzed. Okay, someone is asking if I can't explain a bit better the part of the payroll. Yeah, so payroll run is another way of collecting. It's another way of collecting costs for an AUC. If you have a situation where the project is hiring a staff as a staff member, or or a position has been opened for the particular project, meaning that the person is fully dedicated to this project, then in the definition of the position at HR level, they will include the reference to the project funding program and to the WBS element. So every time the payroll is run, we will be tracking the expenditure. We will tracking the expense that is linked to the position, salary, and also benefits, and will be tracked and linked to the project. So when you are actually also collecting costs if and only if the position is position funding is linked to the project. So John, if you hire a person that is going to work in a construction project, you can ask HR to set the position funding linked to the project. So anytime there is salary, you are collecting costs also on the payroll side. Is it clear? All right. Thank you for the question. So now we go to the next phase, which is the monthly settlement that is done by finance. And this has 3 steps mainly. The first one is review of the projects. The second one is creation of sub-asset masters, and the third one is settle to AUC. From here, I don't want to bother you with the creation of sub-asset because it's something very technical, and I don't think we need to cover it right now. But in general, what we are doing is reviewing the projects, analyzing if there are expenses that happened related to this project, and if there are, we will settle them to the AUC. So the settle to the AUC basically debits expense account and credits. Sorry, that's the other way around. Sorry. Credits expense account and debits the AUC account, the 271 that is linked to the AUC. So we are basically moving from expense to 271 account, and this happens monthly. And then when the final when the asset under construction is completed, we'll have also to review the project. Then we'll have PP01 user marking as technically complete the project or the element. We will have also to manually create the final asset. This is done by FA15. And then there is one technical step to define the settlement rules. But what we do actually is doing the settlement of the cost to the final asset, updating useful life that may not be returned, maybe not required, and then returning budget and closing. So what is this cost settlement doing? This settlement to the final asset. So it's crediting the account of the AUC and is debiting the account of the asset master record. Nothing else. So I give you a few seconds to look at the screen and see if you have any question. Please also click on the green check if you understood this overview. I mean this slide that contains most of the steps. Please click on the green check if you don't mind, so I can see if I need to spend more time on this. Okay, thank you, because there is a question. Thank you for asking questions, because otherwise after the lunch you are very quiet. So confirmation of which part is done by FA 16, I can do it in the next slide. Thank you for the question, Najwa. So this is another view of the same process, so you see more easily who is doing what. So okay, creation of cost collector. Do you see this is done? What is done in projects is done basically either by engineering or by finance. So, but I'm going to tell you who does what. Creation of the cost collector. This is in general done by PP01, by engineering, but finance has to give also inputs, and it needs to be a kind of agreement, because it will have a lot of implications down the road. But typically the responsibility of the engineering and PP01. Allocation of budget is done by FM01, so that's budget of each user. Procurement of goods and services, of course, this is requisitioner and procurement. Issuing materials from stock, this is inventory managers. From payroll, it will be payroll team and HR. Then these three steps of the monthly settlement, these three ones, they are done by finance. So these three are done by FA 16. And then we have, after completion of the AUC, we have the review, which is done by finance. Let's say that all the oranges is done by accounts, mainly. Work is technically complete is done by engineers. This is done by creation of asset master. This is FA 15. So it says finance in the diagram because they have an accounting role, a kind of accounting role, but this is done by FA 15. Update of settlement rule again is finance. Final settlement is finance. Asset useful life update is FA 15. And we have the last two steps: return to budget, which is FM officer, and closing of the cost collector. That I understand it has to be engineering or finance. It's okay. Any question about this slide that has a lot of information, please? If you have no questions, please click on the green check again. I know it's only an overview, and we are not getting too much into details, but at least you know what is going on, and if someone is talking to you about one of these projects, you have an idea. All right, thank you so much. Okay, let me continue. Okay, that's all about the asset under construction presentation. So if you have any question about AUC, is the moment to ask. There is a question. Thank you for the question. Cost collector is not budget. Okay, cost collector is the project or the internal order, but typically will be the project that you create in project system. So it's a kind of, you are going to see it also as well with the grants. It's a kind of a structure where you specify how many assets will your main AUC project will have. If you are building a camp, you will say, okay, I'm going to have one office building, one hospital, infrastructure. We are going to have a big wall around the base, etc. So the cost collector, you define the structure and the number of assets that you're going to have. This creates in the system a funded program, and then is the allocation budget process the one that enters as the budget. So with the creation of the cost collector, you will not have any money available. Shams, I don't know if I replied to your question. Please, otherwise follow up and describe it a bit further. Another question from Mr. John. A software being developed by CITS will be considered an AUC, right? Yeah. If you have a software that is constructed internally, yes, it's an AUC as well. It will also depend eventually on the cost, if it's above the capitalization threshold. But yeah, software being developed internally is typically could be typically an AUC. Any other question about the process? We just finished a second workshop in Entebbe, I think 2 weeks ago. So you should have some FA16 users in your mission, because we did one in January and another one in May. So you will have two. Yeah. Cost collector, the term of another question, no? The term of cost collector is what you have here sometimes like WBSE. It's an element that identifies a part of the project, and you use it to identify, to collect costs. So yeah, it's WBSE. Okay, thank you very much. So if you have no questions, no further questions, I'm going to stop here for 5 minutes. So I open the next presentation, and then we review together grants management. Okay, I'll stop recording so I create 2 different files. I give you a last chance to have more questions. If there are no questions, that's fine. I guess it was an overview and it's not very complex. Thank you so much. Please hold on for, don't go too far, because in 5 minutes, at a minute, it's 2 o'clock, 2:45. So at around 2:50 here in Valencia, we will continue. All right. Thank you so much, and give me just 5 minutes. Thank you.